Hello class, welcome to this video where we are going to go through the chapter 1 and 2 handout that I gave out for you. As I said in the introductory video, this isn't for a grade, but hopefully you had a chance to kind of try to work through it, okay, before you come to this video and you're just kind of checking your work, okay? Or if you did struggle through the lecture and reading the material and you still didn't understand it, you can walk through it with me. The way that I put these questions on here, we're going a little bit backwards. Okay, there are nothing in here from chapter 1. Chapter 1, remember, I just want you to basically be able to identify the difference between financial and managerial accounting. Okay, chapter 2, where we have to identify the costs, which I have the sheet pulled up. It's actually on the back side of the handout. Okay, it's on the second page where we'll identify whether it's a product or a period cost. Okay, then whether it's direct or indirect, and if it's a product cost, is it direct materials, direct labor, or overhead? It's a period cost, is it selling or administrative? Okay, and then putting those together, finding the direct materials used in production, the cost of goods manufactured, cost of goods sold, operating income. Okay, so we got some questions on that first, and then the second part, we're going to identify the costs. Okay, so we're going to get my screen shared with you here, and let's get going on this assignment. Draw a touch here, put it on my board. Okay, so Slapshot Company makes ice hockey sticks. We had 48,000 materials in inventory. During the month, we purchased 132,000 and materials inventory equaled 45,000 at the end. So direct materials used in production. So we're going to take our beginning materials inventory plus our purchases. Okay, and that is going to show us how much we actually have available. Materials then we subtract out our ending materials inventory. And that will show us how much we used. Okay, so our beginning materials inventory, we look. We had $48,000 here at the beginning. We purchased 132,000, meaning we had a total of $180,000 worth of materials available. When we did our count at the end, there was 45,000 left. Bracket that because we were subtracting it out. 135,000. That was the dollar amount of the materials that were used. Okay, that's a good. Not good. That is a great formula to remember, that beginning plus purchases equals available minus ending equals used. Okay, it's the cost of goods sold formula. Okay, because you're going to see we can use it quite a bit in here. All right, so here we go. Next one. These are all running together. Snapshot Company makes ice hockey sticks. We purchased 132,000. Also during the month, we had direct labor costs and manufacturing overhead. Inventory information is as follows. Calculate the cost of goods manufactured. So remember, we need our direct materials used in production, plus our direct labor, plus our manufacturing overhead, plus our beginning WIP, minus the ending WIP, and we do all that, we get our cost of goods manufactured. All right, so we have the first thing we have to do is calculate how much direct materials did we use in production. Well, if you look here, it is the exact same thing that we did above there. Our materials right here were 48, and 45. That's what we had above. $132,000 worth of purchases. So we already calculated the one above. If we didn't have it, we'd have to do that. We'd have to go through and calculate what was our materials used. Okay, we calculated it just in the question just above there. That's where this 135,000 is coming from. Direct labor is given to us at 113,000. Manufacturing overhead is also given at 187,000. Our beginning work in process now we're looking at these numbers. Beginning was 65, we add that in. we need to subtract out the 63,000 from our ending work in process. America's cost of good manufactured is what we are transferring out to finished goods. So that means we have transferred out cost of good manufactured is 437. Okay, so that is part one. Part two here, calculate the cost of one hockey stick. So assuming we made 1,900, 437 was the total cost to produce those 1,900, everything that was finished. So we get $230 per stick. That is what our cost of goods sold. So every time we sold one, we would have to expense $230 as our cost of goods sold. So I want to sell this for $400, $370, $350, somewhere in that area. All right, next page. All right, here we are. During the month, 1,900 sticks were completed at a cost of goods manufactured of 437. That's what we just calculated on that last problem. But even if we didn't do that, now we would know the cost of goods manufactured. That means those 1,900 sticks are finished goods. That is the total cost of them. All right. Suppose that we had 350 units in finished goods on 80,000. And on June 30th, finished goods inventory was 84,000. To calculate cost of goods sold, we start with our beginning finished goods inventory. Cost of goods sold, we're doing it in dollars. Remember, we have 80,000. To that, we add our cost of goods manufactured. That is what we just calculated. And it's also given to us here at 437. When you add those two together, that is your COGA, your cost of goods available for sale. From there, we can subtract out the ending finished goods. Okay, and that will get us to our cost of goods sold of 433,000. Okay, and then it says calculate the number of sticks that were sold. We can do the same thing here. Okay, in our beginning inventory, we had 350. All right, units up here so we know what we're doing. We had 350 plus the 1,900 we brought in. We had 2,250 available to sell. We only had 370 left in stock. So we sold 1,880 sticks. So there's how we would do some of those calculations. And it's kind of all just the same kind of formula. The beginning plus something minus to get us what we have available minus the ending to get us to what we used up. All right. And finally, let's identify some costs here. Okay. So it says we're using manufacturing cells to produce our products. A cell is a manufacturing unit dedicated to production of sub-assemblies or products. Okay, so each cell is going to make multiple products, or no, one manufacturing cell produces small motors for lawnmowers. Okay, so one of the cells. They have multiple cells, looks like, and each cell produces a different product. Okay, so we're looking at that one cell that produces lawnmower parts. What or must be assigned to the cell? So that's our first thing. It says classify these as direct, indirect cost, product or period cost, and if product, what type? Remember, our three types of product cost are direct materials, direct labor, and manufacturing overhead. So I'm going to do it in a little bit different order. I like to do is it product or period first, and then is it direct or indirect, and then we'll worry about what type of product cost it is. So the salary of the cell supervisor, is that a product cost? Yes, it is. It is a product cost because the cell supervisor is dealing with making the product, okay? Is it a direct or indirect cost? Well, it is indirect because it is the supervisor. The cell supervisor probably oversees many cells. Okay, so therefore, he's overseeing the direction of many products. An indirect product cost is always manufacturing overhead. All right, power to heat and cool the plant where the cell is located. Okay. That is a product cost. Okay, because we need power, we need that cell to be heated and cooled, but we can't directly trace that power to it. But it is part of the product cost. And since we can't directly trace it again, just kind of gave it away that it is indirect. And always indirect product costs are manufacturing overhead. Materials used to produce the motors. Okay, well, we're making motors, so that's definitely a product cost. Doesn't give us much information. We're going to call it direct, okay? And a direct product cost is direct materials. And we'll assume it's the major components, the steel and all that stuff, okay? Maintenance for the cell's equipment provided by the maintenance department. Okay, it's working with the product, something, you know, it's within the cell, so it is a product cost. But here it is indirect, okay, because it's provided by the maintenance department. They're getting some kind of salary, not charging us to come in and do it. And even if they were, you know, it might be, well, then it might be a little bit different, but it's indirect here. And all indirect product costs becomes part of manufacturing overhead. Labor used to produce motors. Okay, that is a product cost because it's used in production. Okay, direct because they are producing the motors, and direct labor. Remember the salary of the cell supervisor up there, that was indirect labor. Okay, and all indirect becomes part of overhead, whereas direct labor is its own category, direct labor, but they're both product cost. Cafeteria that services the plant's employees. There's our first period cost. Okay, they're servicing the plant's employees, but it has nothing to do with producing whatever they're producing, right? So it's a period cost, and we would call this an admin cost. Be indirect to production. It could be, depends on what you're looking for as your cost object, whether it's direct or indirect. And I'm not really concerned about that at that point. Okay. That's okay. Depreciation on the plant. Keywords here on the plant. That makes it a product cost. Okay. Indirect depreciation is always indirect. Okay, and indirect product costs are always manufacturing overhead. Depreciation on equipment used to produce the motors. Again, depreciation, product, indirect manufacturing overhead. Ordering costs for materials used in production. Again, used in production, so it's a product cost. We can indirectly relate the ordering costs to our specific cell, but I'm sure there's lots of ordering costs, so it's indirect product manufacturing overhead. Engineering support provided by the engineering department. Again, product, because we need the engineers to make our product. Indirect, because it's coming from a different department, we can't directly get it there. Manufacturing overhead. Indirect product costs are always manufacturing overhead. Cost of maintaining the plant and grounds. Plant. Product cost. Indirect to the product that we're making. Manufacturing overhead. Cost of the plant's personnel office. Plant. So it's a product cost. Indirect labor, because they're not officially making the product. Manufacturing overhead. Property tax on the plant. So again, product. Indirect, because it's not directly traced to a product. Manufacturing overhead. You can see how many, in just this one example, where we have costs that we can trace to a product, but not directly. So it becomes a part of that manufacturing overhead. We have 13 examples here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 of them went into manufacturing overhead, just to kind of emphasize how big of an account this becomes. All right, so that should be able to get you through your chapter 1 and 2 homework. Okay, I'm here for you as always. Reach out to me if you have any questions. If not, you will see me again for chapter 3 and 4 videos.